more or less stayed range-bound through the session, currently with gains of about 0.33%. It's been an incredible journey. It's taken about 11 months to gain about 5,000 points on the Nifty 50, and the last 1,000 points have come in just 25 days, which is quite significant. The broader markets are also looking sanguine at this juncture, but off the high point of the day, I should say, you have the mid-cap index that's up about, or in fact, both of them are off significantly. And you have the small cap index that's up just about 0.1% or thereabouts. Let's talk about some of the key outperformers in trade today and what's contributing. We are going to be focusing on Maruti Suzuki, and it is one of the outperformers in trade today. But among the key contributors in terms of points, you have HDFC Bank right on top of the list, as well as Power Grid Corporation of India, Reliance Industries making some contributions. On the losing end, you have Mahindra and Mahindra, which is losing, as well as Infosys and Sun Pharma, as well as ITC and Kotak Mahindra Bank. A lot of news to talk about, but we are focused in on Maruti Suzuki at the start because it had a stellar Q1. It's off the high point of the day. It was up as much as 4% earlier on, or rather 3% earlier on in the session. It has lost some ground. The net profit has more than doubled on a year-on-year basis and stood at very close to 3,400 crore rupees. The margin has seen considerable improvement on a year-on-year basis as well. The volume mix proving to be favorable for this company. 12.7% is what it stood at in the first quarter. A couple of brokerage notes have come through on Maruti Suzuki. MK has maintained its reduce on Maruti Suzuki with a target of 12,000 rupees, and that is significantly below the current market price. And you have Bernstein that has maintained its outperformance and has a target of 14,400, which is pointing to a considerable upside from this point. So divergent views. Bernstein, for one, is saying that the Q1 results were impressive and saw significant margin gains. The benefits from the SUV and the CNG mix, as I was pointing out, that volume mix improving has panned out on the earnings front. The increasing CNG mix from 28% to 33% has likely helped margins, is what Bernstein has said. And finally, inventory levels at 37 days, which is much lower than the 62 days for the industry, is also something that is positive. We've got, I believe, Lancelot Decuna, who's the CIO of ValueX Wealth Connect, joining in. And we also will have Kush Bora, who's the founder of kushbora.com, later on the show as well. Lancelot, quick view on Maruti Suzuki. As I was pointing out, divergent views. One is a reduce and a price target that's significantly lower than the current market price. The other has got a considerable upside. What do you think?
Well, I am in the camp of the upside at the moment, Alex. And the reasons are, very clear that Maruti basically has been a dominant force in the passenger vehicle segment, almost having a market share of close to 50%. And we see this particular dominance continuing because Maruti has always introduced products that have been able to meet the requirements of the customers. So now, whereas many people have gone into the electric vehicle space, they have come out with hybrids. They are focusing on, people are focused mainly on the other customer. People are focused on the SUV space. They have come out with vehicles in that space, as well as, the multi-use vehicles. So they've tried to find the sweet spot for the Indian consumer, and I think that has helped them. And on the other front, we are seeing that they've been able to reduce their overall cost. And that is commendable, given that, we have seen an inflationary spiral over the last 12 months. And almost all input costs have gone up, whether it is commodities, whether it is, steel, etc. All prices have gone up. Yet Maruti has managed to improve margins, which is a good sign going forward that this will continue, and with demand going to come back into the economy a little better, you should see growth expand significantly from here, and Maruti will continue its dominance in this space.
So it's a positive view on Maruti Suzuki from Lancelot. We've got Kush joining in as well. Gentlemen, we start the questions because we've got quite a few that have piled up. And the first one is from Srivardhan Reddy. And he's asking if this is the right time to invest in Vedanta. I will come back to you, Lancelot, on this because there's quite a lot that is happening in this company in terms of the restructuring of the business as well. Would you say that it's a good time to invest in Vedanta?
I think so because, the business is being restructured and we have seen, the restructuring is going to be positive because it will add in terms of valuation, to the investors. So at the same time, the commodity cycle is at its highs and ideally one should not invest in commodity companies when the market cycle is at its peak because whenever there is a correction, these commodity prices will come off significantly, and along with that, commodity stocks will also see a downward move. So while the business fundamentals or the case for the restructuring makes a case out for an improved valuation from an upside perspective, there's also the heightened risk that you might see commodity cycles turn and thereafter one would see a significant downside once the commodities prices move down.
Okay, that's a fair point. We've got a question on ITC, and this is PVS Narasaya's question. This one's for you, Kush. He's bought 1,000 shares at a price of 495.56, which is very close to the current market price. He's asking whether to hold for potential upside or should he sell?
Hi, Alex. Hello, Lancelot. Well, ITC is one stock that you should have in your portfolio. Not only from a growth or a gains perspective, also from a margin of safety perspective. That's what I've maintained for a while now. It's a great thing that off late the stock actually seen quite a stellar run up. From those 400 levels all the way up until 500. You might see some consolidation going forward, but I think on the whole the trajectory is pointing north. And as I said, from the idea of the margin of safety, it's a good stock to hold in our portfolio. Continue to hold. If you're looking for a stop loss, then from a near-term perspective, I think 470 is a number to watch for.
Okay, I'm coming back to you, Kush, on this next one. And this is from Satish. He's asking about Hindustan Aeronautics, which he's bought at levels of 4,550 rupees a piece. He's got 25 shares. He's in the green. He's wondering whether to hold or should he sell?
My suggestion on this one would be to sell. The stocks actually attempted a rebound. And faced resistance at the 50-day moving average, which comes to 5,100. I think whatever a near-term story was, in these stocks have been played out. If you get any kind of fresh triggers, then perhaps it would move higher. But I think for the time being, the volumes are shrinking. The stock's gone into a consolidation mode with a negative bias. Plus, despite the sharp profit booking, as you said, he's still in the green. So not a bad idea to take some money off the table at the moment.
Okay. Lancelot, I'm coming to you for a view on New India Assurance for a period of 12 to 18 months. This is a question from Gautam. He's writing in from Mumbai itself, and he's asking whether it is late to buy this company at the price of 293.
Well, actually, this company has benefited from the entire PSU run-up that we've seen. So in terms of valuations had risen, but at the same time, if you look at its business, profits have improved, and given that economy is also going to grow, the demand for general insurance is going to rise. And New India, being one of the premier general insurance companies, will stand to benefit from the increased activity that is going forward. And if you look at its underwriting losses, this time underwriting losses have also reduced. So that is a positive for the company. And if you take a 2-year perspective, one would look at, maybe investing, but wait for some correction would be a better option to invest rather than buying at this price.
Okay, fair point. That's the view on New India Assurance. HDFC Bank, as I pointed out, it's contributing the most to the points gain on the Nifty 50. It is up about 1% or so. And in fact, so we've got Haresh asking about this. He's short sold HDFC Bank at 1,632 Kush is looking for an intraday view on this one. It's bounced from the low point today. It's doing reasonably well. What would you say about this transaction?
Alex, of all the queries that I've had on HDFC Bank, this is the first time that I'm getting a short sell query. So that's a new one, right? The selling price you said was about 1635, right?
1632.
1632, fairly close, but on an intraday basis, the stock's actually gaining some ground. So, it'll be prudent to keep your stop losses close to 1645 zone. If that is taken out, the stock could perhaps, end closer to the high point of the day. So my suggestion, if you've short sold, keep a stop loss at 1645. At the moment, the stock's actually turned around. For intraday, you could perhaps see some sort of a reversal. And by that, I mean on the upside. So 1640, 1645 are the zones to watch for.
All right. Jubilant Food is the next counter that we're talking about. And this is a question from Ankit. He's writing in from Ahmedabad. And he's asking for a view on the stock. Lancelot, do you view the company and its menu favorably?
So I think, the stock has risen considerably, and while the results which they announced were pretty reassuring, I think going forward, managing the food inflation is going to be a challenge for the company. So from this perspective, stock seems to be fairly valued, and, one can either look at booking profits if you're in profit, or wait for a correction, to buy into the stock, because from here onwards, very unlikely that you're going to see significant profit growth. And flat profits means either there'll be a period of consolidation, or you could even have a downside if there's a negative quarter.
I asked about your view on the menu, so I can take from your silence that you're not too much of a fan of the pizza.
Yeah. That's true.
That's true. All right. The next question we're taking is on Grieves Cotton and Orchid Pharma. And we've got a question from Neha from Bengaluru. She's got a 1 to 3 month view on this, and she's holding on with gains of 30% in both of those stocks. Kush, is what she's saying. Grieves is down in trade today. Would you hold on to this, or would you sell at this juncture?
Well, first up, congratulations on the 30% gains, and especially on both the trades. Now, both of them look excellent on the charts from here on as well. My suggestion would be to lock in your profits using a trailing stop loss. While Grieves is down today, there isn't too much in terms of a worry, except for the fact that the stock is fairly volatile. So you would want to lock in those profits. Now, where do those levels come in for Grieves Cotton? It is at 167 is where you want to place your trailing stop loss. And as far as Orchid Pharma goes, it's a little lower, closer to 1340, 1350 kind of zones. So my suggestion, continue holding on to both of them. We've seen a good uptick in the price and the volume action as well. So hold both of these with tight trailing stop losses now.
Okay, I'm trying to pull up Infibeam, which is trading at 31 rupees per share. And we've got Sahil, who is bought at levels of 39. He's asking whether he should hold or sell. He hasn't really given us a time frame. So, Kush, I'll just go to you on the technicals of Infibeam. What would you suggest that he do?
So, Alex, this is one share that we normally don't suggest getting into in the first place. Hasn't really done too much for investors, except for those sharp spikes that you get every now and then. But then it makes it a little difficult to sustain around those levels. The first thing is to avoid these kind of shares. Now that he's already into it and still staring at a loss, my suggestion is exit. The stock's dearly trying to hold on to those 30-31 levels where some of the key averages, near-term averages converge. But otherwise, there isn't too much on the chart just saying that a turnaround is on the corner or anything of that sort. So for me, Infibeam is a very clear exit.
Exit. All right, that's a very clear statement from Kush. Kush, as well as Lancelot, do stay with us. Viewers, we'll be back after this very quick break to take more of your questions. So do stay tuned. Welcome back. You're watching Ask Profit. And Lancelot, I asked you early on in the session whether you liked pizzas, and you said no. Do you like burgers instead? Because this is a question coming in from Marut. He's asking about Restaurant Brands Asia, and he's asking about Devyani International, both of which he's bought at 111 and 153. He's wondering whether QSR results are better. You suggested that inflation pressure is something that they're contending with. Is that something that extends to these two companies as well?
Yes, I think in addition, Devyani also has the issue about, there are recently some problems about the cheese, whether it is to be called cheese or not cheese. And there are various issues relating to, the Food and Drug Administration approvals on that. So I think given that, they are moving into let's say, a place where people are focusing on healthier foods, it is becoming a challenge to increase sales purely on the basis of for burgers and pizzas as well. So at the same time, the number of outlets available also increasing will improve sales. So I don't think, on one front, you will see a little bit of pressure, especially on same store sales in areas which had these stores for many years, and the new stores would generate fresh sales, so that may average out and you may still see some growth, but it is going to become challenging to maintain margins, as well as with costs going up, profitability could be muted.
That's a fair point, because it's not just an India phenomenon. I was reading a headline earlier today that talked about McDonald's in the US, which is only seeing sales go up or tick up because they've introduced a $5 meal, which is lower. And so therefore one would assume, yes, of course, that's going to hurt margins going forward. Hopefully that answers the question that Marut had. IOCL is the next counter that we're talking about, and this one's for you, Kush. He's bought 1,500 shares at a level of 165. So he's still in the green. He's asking whether to hold or sell at this juncture.
Alex, just quickly, while on the subject of food, do you have a question on a cafe coffee day or some dessert? We might as well complete the menu, right?
Sure. But I'm going to go and get a coffee. We have great coffee in the office. I don't spend on coffee.
I can vouch for that. Right. So just coming back to ISCL, Alex. My view is that, these stocks, they have their phases, and, there is this momentum spurt that comes about. These are not stocks that you'd want to hold on for, 3 to 6 months, keep rolling over your positions. They've seen a spurt, but also a round of profit booking has come about quite sharply. My suggestion, since he's got about a neat, 10, 13 rupees kind of a profit at the moment, book out. It's a range play. Once again, if you get it back, around those 160, 165 levels, you might want to consider a re-entry. But now would be a good time to, take some money off the table, book profits in IOCL.
Okay, I'm coming back to you. Hopefully you have a view on this one. And it's the Northeastern Carrying Corporation. Kush, and hopefully you can pull up the chart. The stock is currently trading at 37.25. It's only a market capitalization, as I look at the screen, of 350 crore rupees. We've got Khurshid, who's writing in from Srinagar and Kashmir and asking about this. He's bought at levels of 33. He's in the green right now, just barely so. Should he hold on to this?
First up, I'm so glad, we've got viewers from Kashmir as well, so heartening. Also, in all honesty, I have not heard of this company before, so it's only a quick glance that I'm looking, I'm making on this stock at the moment. As I see, there are early signs of topping out. The stock's actually done quite well in the last 12 to 24 months, but at the moment, there are signs of topping out. So if I have any kind of position, I would perhaps look to exit partly, if not completely. And 35 is a key support zone. If that is taken out, the stock could perhaps slip to lower levels. So book partly, hold the rest with levels of 35 as your trailing stop loss.
Okay, that's a fair point. Okay, so there are a lot of short-term queries coming through. This one's also for you, Kush. ISMT is the name of the counter, and Lavish from Indore is specifically asking this of you. He's got 500 shares at levels of 140. The stock is currently trading at 132, down about 2% in trade. What's the one-year time frame view?
I'm glad that the time frame on this one is 1 year, because the stock for the last 2-3 years has been actually a rank outperformer from the levels of 12. It's gone all the way to 120, 150 as well. Plus, it's had its fair share of volatility. So excellent idea holding this one for the long term. For about 12 months out, I wouldn't be surprised to see this stock move close to 180, perhaps even 195 kind of zones. So continue holding on. But as I said, because you've been invested in this for a while, I'm assuming that that this stock also has its fair share of volatility. So be a little mindful of that. Don't panic when it perhaps comes a little lower. Positional basis, there's a strong support zone at 110 levels. If that is broken, no matter what, you might be better off exiting. But from a 12-month perspective, you're looking at a 180 kind of a target.
Okay. Actually, we spoke about Restaurant Brands Asia and Devyani earlier. Can you also give us a quick technical view on these? We've got Restaurant Brands Asia bought at levels of 111 and Devyani bought at 153. Would you hold on to these? Yeah, this is Marut's question, which we had discussed earlier. Restaurant Brands Asia bought at levels of 111 and Devyani at 153. Would you hold on, Kush?
RBA, I would hold on, and there are some of the key averages converging around the 110 level. So if it's a trading position, I would continue to hold on with a stop loss just under that. So 108 is perhaps the level that you want to watch out for and continue holding on. Devyani also on a weekly setup is making a higher high formation. So here too, you could continue to hold, stop loss being 168.
Fair point. I'm coming to you on NCC Limited. Lancelot, do you have a view? And we've got Manoj, who's asking whether it can be bought at the current level, 353 or thereabouts.
So NCC actually is a good company in the sense that it's been into the contracting business for a while and has generated good profits because of some orders that it has gained. But in the last boom of the infrastructure, when everybody started buying infrastructure stocks, I think valuations have gone up considerably. And given that the stock is looking, fairly priced, one would not want to buy into this company at this point in time.
Adani Energy Solutions up about 7% in trade today, outperformer, and we've got Mukesh asking about it. He's bought at levels of 977. He had a swing trade outlook on this, and he's wondering whether to hold on or exit. Kush, of course, the stock is in focus on account of the QIP as well. What would you suggest that he do with this?
If money is not really a concern at the moment, my suggestion is to continue to hold this one. There are near-term resistances that the stock could hit, perhaps close to those 1250 zones. But once that is taken out, you're looking at a big swing towards 1450, where the 200-day moving average lies. So congratulations on the trade and holding on to this one with a stellar near-term profit at least. For now, you could continue to hold. Just watch for the 1250 mark. If it does take resistance and book partially. If it gets taken out, then you're in, as I said, for a 1400, 1450 kind of move as well.
Okay. Just a standard disclaimer. This is NDTV Profit, which is part of the NDTV Group, and it is owned by Adani Group. Unfortunately, we're drawing to a close on this conversation. We have to end a little earlier because we've lined up a conversation with Maruti Suzuki at 12 o'clock. So you should watch out for that. Lancelot as well as Kush, thanks so much for joining in and for answering all the questions that you did answer. We will try and take more of your questions when we are back tomorrow. Do stay tuned. This is NDTV Profit.